This is a breakdown of the Euro-US session for the 27th of October. Once again, start of Frankfurt and first few hours of London. There wasn't much movement. There weren't many fundamental news announcements, so not a lot of volatility in the market. I thought I'd take this opportunity to go through the micro channels so that you can have a look at forecasting your triggers and also your confirming your take profits using a much more minor scale channel. Okay, let's have a look at what happened. I took a trade short on the close of this bull candle just prior to Frankfurt. Now, out of nowhere, or is it just a forecast? If you look at the channel here, the market reached up, bounced there. I was expecting a bounce here. I looked for historical evidence, so there was a push down off that. There was a push up off that. To me, there is a short trade because it should run at least this far, hopefully this far, which is enough to get to break even using, well, certainly with my broker, I'm sub 1 pip generally for the Euro US for commission and its spread. Okay, same is true on the way down. I'll just reverse that channel. You can see the market bounced here, C-click, it bounced here. We'd projected it's going to bounce here and come back to here, possibly there. Okay, entry order off here, no run, but still enough to get to break even. Okay, from a short point of view, channel here, micro channel bounce there, we'd expect it to bounce here. Reverse is also true. Channel bounces here, bounces there, we'd expect it to go down to here. There's entry order off there. I'll hide the channel. There's a run. Yeah, not a particularly vibrant Frankfurt night, but we've got a few trades, break even, no pay yet. This, however, C-click the low. You're expecting the market to come up into this zone through here. Okay, market comes up to here, retraces a little, retraces a bit through there, up to here, and pull back. I like using pullbacks as a confirmation of my 50%. So click that low, and there you go. You've got a high. Okay, so that is your take profit, and an 18.1 pip run, so 17 pips net. At this point, look at the last micro channel. You can see here the market retreated to the 50% from this shoulder here. We'd expect to bounce there. There's your entry order for short. Right there. I'll hide the channel. Alright, so market runs again, which is fantastic. It's not much of a run, but still we're in with no free ride, more or less. C-click the top. There's your channel. Our expectation would be to bounce along there, so there's your take profit. That is a 16, let's just say 16 and a half, but 16 pip run, so we're at 33 pips. We're expecting a break. It's broken through here. Now you could have taken an entry order off that low there, however you would have worn some heat. If you hadn't taken an entry order and it had come through to this point here again, our expectation is a micro channel should be replicated, so you're expecting the market to come up to this zone. Now, once again, no, it's not a payer, but you get to break even. Same with the top here. You would expect it to reach back down and once again no payer. We don't get a viable trigger until possibly here, which is 50% of this value through here. Okay, so this is the point you're looking at, and it's really more or less a guide, but the market bounced through. You can see it's gone through to the 25% pullback through the 50%, almost gone up to the 75%. That is your last defined channel point through here, and the market reaches back. If you want to look at it from a practical point of view, imagine the market's breached a channel. At this point, entry orders are activated, and as people go to break even, or as institutions or as robots go to break even, the market reaches back for it, and that's why you get your double taps and your triple taps, etc. It is a point where contracts are laying, the market reaches back, and then she drifts. Nothing exciting in there. If I had taken that trade short, I would be expecting to take profit from the last channel, which is C-click right there. Okay, that's an additional 17 pips, as I say, 16 pips. Frustration had me out of that. If you're looking through here, your expectation is a bounce somewhere through there. Now, an entry order off here for the same reason as before. You're looking at projecting your take profit. Okay, once again, you've got C-click. You're expecting a bounce somewhere between that point and that point. It's up to you to determine what is the most cautious. I would use the defined first channel through there. So you can see it came down and failed. Not a lot of pullback off there, but broke down through to there and back up to here. Now you could be a little bit more aggressive and look at the actual bounce in the move forward. There's a good take profit as well. Up to you how you adjust these. I would look at the last micro channel for confirmation. So let's get rid of the channel. Now we know that the projection was somewhere in this bull candle here. We look at this last micro channel, click on there, click on there, there's confirmation, go back historically, and it's a point of support and resistance. I'd be taking profit there, which is an additional 13, so an additional 12 pips. Not a very productive night pip-wise, but once again, if you're using the micro channels, you get very strong points, projections for points to take your profit, but more importantly, strong points to take a trigger. I hope the micro channel analysis has been helpful. Good luck with your trading. I will speak to you tomorrow.